Okay, lock in everyone. We are about to go over a masterclass. It's going to be a short one, just how you guys like it. I'm going to go over exactly how you're going to be able to trade, how you're going to be able to capitalize on big moves like these within the market and pretty much make money from them consistently. And you don't really have to trade every day to do this. You just need to identify the days where the trades are obvious and pretty much take slightly higher risk on the trade so that you're able to make more reward and overall cover the less frequency of taking risk by increasing the overall risk taken per trade. So let's get into it, listen up, and learn. Markets move in cycles. Once you identify what market is trending towards higher from on the higher time frame, you just want to identify lower time frame expansions. Okay, so what is gold clearly doing on the daily time frame, specifically when we entered, right? So we're going to go the weekly is bullish. We all kind of know that. We're not going to go over that. And if you don't know that, maybe watch a beginner's video. This is slightly advanced just by a little bit more than a beginner. We see that it's going up on the daily time frame. Okay, this is not too hard to see, guys. The 4 hour is bullish. Price is continuing to go higher. So what does that mean? When price is drawing higher and higher, there's really no reason to try and identify the top of a market. Instead of doing that, ride the wave for as long as you can, and when trends change, identify it and pretty much secure your positions. 4 hours bullish. Okay, 1 hour. What are we looking for? So I'm gonna go over specifically this trade we took during the week because this is the one that I sent to the Discord. I think I also sent this one, but this was last week. This one was this week. Well, it was beginning of the week, but I didn't send it. Something happened. I don't know. Focus, guys. Sorry. So the hourly time frame is actually bearish, right? But what did we just say 2 seconds back? 4 hours bullish and the daily time frame is bullish. The weekly time frame is bullish. So if the 4 hours is retracing and we see that price has been pricing efficiently this entire way up, there's really no reason for this retracement not to be overtaken if the lower time frame starts to reverse, right? What do we see? We see market opening, and we also see that we take out the London session low. This is a very nice confluence to have because that means that all London traders are likely going to get stopped out because their stops are going to be within that session range. Next, more important thing, the hourly is bearish, therefore we need to get a 15-minute invalidation, meaning we need to see the 15-minute change in structure before price heads in the overall larger trend direction. Okay, so what happens here? I'm not looking at the right thing, right? Bear with me, guys. If you can't focus until I find this specific setup, you shouldn't even be trading, respectfully. So bear with me and see how long you can focus without me giving you sauce. Okay, here we go. So what do we see here? We see at New York Open, price draws down, takes out the London session low, and then what happens? Price breaks structure. Boom. Once structure is broken, now we can see a 15-minute flip in structure, which is likely going to reflect on the hourly as a future hourly break of structure, because these time frames, 1 hour is for 15 minutes. Okay, so if the 15-minute breaks, we're likely headed up in that direction. So 15-minute breaks. So starting 9:45, we're pretty much looking for entries on the lower time frames. So we're going to go back there. Bear with me again, because this is very simple logic. Okay, guys. 5-minute is also bullish. Why? Because the 15-minute broke. So we're looking for areas where we can enter. We see this fair value gap here. This is a very good area, right, from the 5-minute standpoint. So we're just going to refine our information to identify exactly where price is likely to retrace within that past expansion on the lower time frame. That's all. Because what have I done? I've looked for structure to change in the higher time frame direction, right? After that, I said, okay, 1 hour is bearish, but it's likely going to turn bullish, right? Because the 15 minutes flipping structure. So I'm going to trade this move to the upside. Okay, that's all I'm doing here. So once I see the 5-minute align, the 15-minute align, and the hourly is bearish, I'm going to wait for the hourly to flip. So anticipating that, I'm going to enter a trade. Okay, right around where price is pretty much changing structure. That's not complex to understand, guys. The daily is bullish, the 4 hours bullish, the hourly is bullish, the 15 is bullish, the 5 minutes bullish. Price is just going to keep on going up. Stop trying to time a point in which the market's going to reverse. Nobody cares. You only need to know where the market's headed and find a specific way where you can pretty much take advantage of that and run a trade. That's all. It's not that hard as long as you know what it is you're looking for. And identifying these specific points is a very key skill. So what do we see here? Boom. This was the